Hey guys, HitoriFX here. Welcome to the second episode of the Weekly Market Outlook with TRADEXPROP. In this episode, I'll be covering the dollar index, gold, and the US500 index. So, if there's any other asset classes or pairs that you would like me to forecast, leave a comment down below and I'll get back to it in the next episode. Alright, so let's just get straight into the video. Here we have the dollar index on the monthly chart, and if you recall, I only go to this time frame 3 times a month, which is the first week of the month, mid-month, and the last week of the month. And technically this is going to be the second last week of the month, but I won't count the 29th and 30th of the month to be the last week, so this is technically the last week. Alright, so on the monthly here, we can kind of see we have expanded very aggressively above this supposedly bearish fair value gap. We are still caught within this range right here on the monthly with this swing high and swing low. So until we take either of these out, we are currently ranging within this internal range liquidity right here. So in this example, if we close above here for the month, I'm expecting next month to retrace back into this bullish inversion fair value gap to push price higher into this monthly swing high right here, which I can then use to frame a trade lower to continue higher. But as of now, since the month hasn't closed, it is hard to say whether or not we will actually close above this level. But where we are right now, I'd say it's pretty likely that we're going to stay at least above this area right here. All right, so there's nothing much on the monthly. Let's drop down to the weekly. All right, so here on the weekly, if you recall last week, I noted that my targets for the previous week were this high as well as this order block right here. And if we were to displace above both of these levels, I'd be targeting this relatively equal highs, this low resistance liquidity run up top, but we don't displace above it. We kind of reject this order block right here, as well as, let me pull this up, as well as this weekly high right here. We fail to displace above it, which is why I'm edging towards a retracement lower into this newly formed weekly fair value gap for next week. So I'm expecting a bearish week next week, which means we are likely to see an open high, low, and close into this weekly fair value gap, and then we'll see the reaction when we come down into this level right here. So it's pretty clear cut. I think this price action is pretty easy to read from my experience. So let's drop down to the daily to see if there are any other levels we can play with, other than the fact that the larger idea on the weekly is to see price travel back into this weekly fair value gap right here. So on the daily, at least this is previous week's high. Let me just delete this. I think it bugged out. All right, so here we have previous week's high right here, right? And we have previous week's low, which is the opening of that weekly fair value gap, right? So at the moment, we came off of this daily volume imbalance on the left, as I noted on the previous week before the last week. And currently at the moment, we are respecting this daily fair value gap, and we have pushed higher. So based on the daily, it is a bit misaligned because I'm expecting a move lower, but on the daily we are seeing a bullish reaction from a discounted PD array. So even though I'm expecting price to come lower into at least previous week's low, remember we could see something like a open high, low, and close week. So it wouldn't be weird if the market decided to take out previous week's high and then continue lower from there, since my general direction is to the downside as of now. So I'm gonna wait to see how the market plays out during Monday if we were to take any daily highs right here. Maybe we can have this area here. Maybe price could sweep that, come very close to previous week's high, and then come lower. Or we could just take out this entire pool of buy side liquidity around here, because we, as you can see, we have kind of like a unswept pool of liquidity at the area. So it could, like, we could see price travel higher into previous week's high or around this area before coming down lower. All right, so as of now, that is my expectations for next week for the dollar index, right? So let's get into gold. Okay, so here we have gold right here. Let me get to the monthly chart. So gold on the monthly chart, not much has changed. We have this monthly FVG that I'm expecting to form. So I'm not expecting price to kind of come back to this level to completely mitigate that high and leave no fair value gaps. I'm expecting this to stay open. It might decrease as we play out into the month, but as of now, at least I'm expecting a fair value gap on the monthly to form. So that means we could continue higher into current all-time highs, or we could just continue to range from here. So not much information on the monthly. This is our current range, right? We have the monthly low, monthly swing low that took out this previous monthly swing high, which makes this a low, all-time highs, current range we are in. So not much information we can kind of extract from this data set. So let's move down to the weekly time frame right here. All right, so here on the weekly, we have more levels to play from, right? And remember last week I told you guys, hey, maybe you might want to check out this midpoint of this weekly long wick right here, which is the consequent encroachment of that wick, because it might act as a level of resistance. And last week I expected price to reject off of this level to come lower. However, we don't see that. We did come up into this weekly wick CE, and then we kind of ranged after that, and last week closed in an inside bar within this overall larger range, right? So as of the moment, my bias is still the same. I'm still expecting a move lower into this weekly fair value gap, and I am going to expect some form of a reaction to maybe go higher. And even if it doesn't go higher, this could be a pullback that you can play on an intraday time frame, right? So if we violate this fair value gap, we could come down lower into this weekly this is a FVG, pardon me, this is a weekly fair value gap. So we could come down lower into this weekly fair value gap just beneath it, and we could see a reaction higher from there. But overall, as of now, at least for next week, my game plan is to see price come down lower. So however, I don't want to be calling tops, because now we are really near current all-time highs. I've said it multiple times, as well as in the previous video. I don't want to be calling tops. So I just want to see if we can use this to bounce higher to break current all-time highs, or if we are going to start transitioning into a bearish trend, at least into the weekly midpoint right here of this current range that we are in. All right, so this is going to be my draw on liquidity for next week, and I'm gonna see how it goes, right? So that's my game plan on the weekly. Let me drop down into the daily to see if it aligns with the time frame or not, right? So last week as well, I said, hey guys, we had this order block here. Actually, let me just draw this out. We had this daily order block. This was Monday, so I'm like, okay, we might push off this level to go higher, and we might see resistance around this week CE, which we did. As of now, we have rejected this level right here, as well as taken out this entire pool of buy side liquidity, which is what's eyeing me that we might come down lower into previous week's low, right? If we go on to the weekly right here, to at least previous week's low, or back into this weekly fair value gap is my game plan. So as of now, it's still the same, right? It's still pretty much the same. I want price to kind of transition lower onto the daily time frames or lower. I want it to transition lower from there to show me confirmation that we are likely to continue back into previous week's low, or maybe even that weekly fair value gap that we saw in the previous week. All right, so it's pretty clear cut, but as of now, trading on such a trending asset is really difficult. It's kind of like the S&P 500, which has been trending upwards for a very long time. It is quite difficult to trade because it just kind of goes, consolidates, expands, and consolidates. It barely pulls back enough for you to get an entry, and once it actually does a breakout and commits to it, you are always second guessing yourself because you are seeing that as a breakout and you don't know if you may have bought at the highs. So at this point of time, when you are trading this kind of trending assets, especially at all-time highs, always try to get in and out, especially when we have developed such a long and large amount of price action. Try to capitalize off the fact of short-term trading where you don't really care about the longer term movement of the markets, which I think is the safest bet if you didn't get involved all the way down here, right? So that is my outtake on gold. I want it to continue going lower into the weekly fair value gap that we saw on the past 2 weeks. My bias is still the same, and here we even have a potential confirmation that we are going to transition into lower prices from here. All right, so that is my forecast on gold. Let's get into the US500 or the S&P 500, right? It's the same thing. Once the CFDs, one is the index itself that the CFD tracks basically. So all right, so here at the moment, same issue that we are finding with the S&P 500 is that it's super trending, right? It's super trending to go higher. This is the monthly. Indexes generally tend to trend higher, but if you go down onto the lower time frames, you will see just how trendy it has been. It has flown around 27% in a span of just this is like 6 months since October. So at the moment, we are at current all-time highs, similar with gold. So we took out this all-time highs right here. This is that low that took out that high, and this is the current high that we are in and we're playing with. So this is my current range with the midpoint around here. Zooming in, we have this monthly fair value gap that we're currently in, and we are really deep into the fair value gap, filling it completely. So at this moment, we could expect a move higher to continue to take out all-time highs if this monthly fair value gap is respected and we start to trend higher on the low time frames. But if we disrespect this, same thing, expect it to do a move to go lower like this into at least discounted pricing where we have this fair value gap, and this one is a bit higher, so we could use this as another area of interest if we get down to it. All right, so that's my take on the monthly. Let's go down into the weekly time frame, right, where we get more information. So for next week, my immediate draw on liquidity is previous week's low, as well as this coinciding relatively equal lows forming an LR right here. This is my draw on liquidity for next week. There's not much structural points I am looking at on the weekly because we have just been crazily trending without pulling back. So there is currently no weekly swing lows in this leg right here. This isn't even a weekly swing low, but it is nonetheless a weekly low that coincides with the previous week low right here. So my drawn liquidity for next week is this. So because of this large expansion candle, we could actually anticipate a weekly fair value gap to be put in right here for the next week, because in order to not do that, we have to travel all the way back into this previous low, which I think is unlikely, but it could happen, right? But more so than not, I'm expecting a weekly fair value gap to form somewhere around here, which we can then use on the first week of May to see what happens if we trade into and reject it, or if we disrespect it to go higher from there, right? So just a waiting game. But next week, I'm expecting a bearish week until we reach this previous week's low or this relatively equal lows, right? So open, high, low, and close right here. All right, onto the daily. We have more information down here that we can see. So weekly targets is the same right here. This is that previous weekly LR, right? So up here we can kind of see we have more structure points, a lot of swing lows that we can play with, but none of them are really energetic, nor are they like standing out from one another. It's just been a big trend upwards, right? We came up into this swing high, we came back down, took it out, and then we saw a market structure shift. We had this bullish fair value gap, which was taken out and violated down here. Price came up to it and then rejected off of it to go lower. That is the origin of the move. So for next week at least, this is the current daily range that we are in, right? This swing high kind of was the origin of this large move right here, right? Because this is a swing high, but it wouldn't be the origin for me because we came down, came up, came down again. So this would be the apex of that move, and this is the current low that we are playing with, right? So for next week, since my drawn liquidity is down here, I would like to see open high low close of the week, right? So where can we find resistance at? Well, seeing how Monday plays out, if we do get a fair value gap, we could use that to go lower. But if we continue to go higher, we might come into this daily fair value gap, or even preferably at least this daily inversion fair value gap right here to push price going lower, maybe past this back into this daily order block. Technically this is the order block, but because we tapped into it previously, I just decided to make it just the body of this bearish order block before that impulse higher that makes it an order block. So yeah, overall just clean price action on the DXY, but on things that are trending like gold and the US500, it could be a bit more tricky to trade. So if you don't think that these market conditions suit your strategy or suits your understanding of price action, it isn't a bad thing to decide to stay out of the markets, because as we know, different strategies have different strong points. Some of them work very, very well in ranging markets, and some they work very well in trending markets, right? So understanding where you should be risking your capital and in what type of markets to even think about putting money on the line is very, very important. And actually that is the one thing that keeps people profitable and unprofitable, right? So yeah, that is pretty much all for this week. If you have any other pairs, just drop a comment down below, or even better, join our Discord channel, which is free of charge, right? Just join in and you can talk to me or talk to any of the traders within there, and yeah, just keep things flowing. Yeah, all right, so I won't take too much of your time. Take care, stay safe, and be patient. All right, see you guys next week.